Digital transformation initiatives can lead to the strengthening of a business's operations and the expansion of its product and service offerings. They can also expose vulnerabilities and competitive disadvantages and force companies to re-evaluate their digital strategies. In this ever-changing landscape, companies need to have a process in place to evaluate their value chain and understand which core competencies are needed. This process should inform how they refine their digital capabilities through internal initiatives, partnerships, and even in investments in startups and nimble players that can value add in the future. So how should companies best analyze their value chain for the digital age?
Talking about essential services of a bank, what is it? It's you want to store your money in a safe place. You want to transfer the money wherever I am and to whomever I want. I want to get help when I need money, so loans. And the fourth is I want to grow my wealth whenever I have something to save. Banking actually started to exist 500 years ago. 500 years, nothing changed. We just created a little bit of efficiency in the back end with the computers. But now 5 years ago, this little mobile device became the mean of interacting with the bank. Because people are now spoiled with all the services they get through their mobile, their expectation level raised. Today you want to have everything in 5 seconds because you're used to it. In the future we have to say, okay, that's what the customer expects, so how can we group around this expectation? A few companies came in and took out slivers and pieces of our business and delivered in this 5-second window, and obviously they grab a market share. 5 years ago, fintechs were very self-confident. These days we see more a collaborative approach. They come to us and say, well, we have a great solution, can you deploy it because you are the customer? Yes, absolutely we can do, and we are well suited because we are operating in 70 countries. Our real competitors are the new entrants. So the Apples, Google Pay was there, the WeChat, the Alipays, the Tencents and the Alibaba. So these are the companies we take very serious. Will they win the hearts and minds of all the customers and the customers we are after? We'll see. In wholesale, customers came to us and say, you know, Michael, we are operating in so many countries and every country has a different payment schema. Can you help us to bundle this and give us one simple API how we can collect money throughout the world? Here the value add of a bank comes into play. In bundling these services and give a clear commitment and a clear SLA to our customers, we add value and therefore they are willing to pay us a certain fair share for it. Because we have initially the trust of our customers. We want to have a trusted partner who brings these services together. We are more service aggregators than necessarily a service creator in all of the areas. Technology will, as it evolves, will replace all the transactional and all the repetitive tasks in a bank. What will stay is the exception handling, the consulting and the advice piece. If we deliver our services in a neat way with a nice user interface, together with our extra care, human care, we probably will be able to survive.